Hello friends, good to see you back. Stop loss is one of the main risk management technique that is used in any of the trading or investing. It allows you to cut your losses and protect your capital so that you can trade for another day or another opportunity. There are various types of stop losses for different types of trades. I'm Govind here. I'm very excited to share the different types of stop losses and how to use these different types of stop losses for a different types of trades. Before we understand the various types of stop losses, let us quickly understand what is the stop loss. For intraday trades, it is an order in the system or in the exchange to limit the losses against the position that you have taken. For overnight F&O or even stocks, you need to have a hedge so that the gap up or gap down will not put you in trouble. Let us say you have bought a stock or a future or option at the price of 100. So that means you are on long and the buy order is executed in the system at the price of 100. You are expecting the instrument to go up and book the profit at certain level, maybe at 150, and get out of this trade. When the instrument starts going down, before even it touches 150, you will start making the loss. And there has to be a limit at which you want to limit your loss and get out of this position. The maximum loss that you want to make on this trade is 10 rupees. So that means you need to put a stop loss order, that is a sell order, to cover this buy order at the price of 90. So when the stock or the instrument touches the price of 90, your sell order gets triggered. So that means your entire trade gets closed with a loss of maximum 10 rupees. So for any buy or a long position, there has to be a sell order in the system. Similarly, when you sell an option or a future or a stock, let us say at 100 rupees, so that means you are having a short position and there is a sell order that is executed in the system. So you're expecting the instrument to go down and book the profit at lower price, let us say at 50, and get out of this short position. When the instrument starts going up, you will start losing the money for this short position. So if you decide to have a stop loss that is maximum of 10 rupees that you want to book the loss for this short position, you will have to get out at the price of 110. So what it means is you need to put a buy order in the system to close this short order at 110 price, so that your overall trade will be closed and the maximum loss that you are taking is 10 rupees. So for any sell position, there has to be a buy order in the system so that your overall trade will be closed at the loss that you have defined. Friends, I hope you got a quick idea of the stop loss for buy and sell positions. Here are the 6 types of stop losses: the percentage based SL, the price action based SL, indicators based SL, time based SL, and we also have mental SL and trailing stop loss. Let us understand each one of them, what are those and how to apply them for different types of trades. Friends, to be a consistent profitable trader, it is important to know 2 things even before you use any of these stop losses. One is the amount at risk, which is nothing but the amount that you lose if the stop loss gets hit. It is also connected to the position size or the quantity that you put on a particular trade. Ensure that the amount at risk if the stop loss gets hit is not more than 1% of your capital at any given point in time. This way, you will get out of the trade and your capital will be preserved for a next day or next trade opportunity. And the next thing that is important is the risk reward. Ensure that your risk reward is at least 1:1, or it is best to have 1:2 risk reward, so that over n number of trades, you will be a consistent profitable trader. 1:1 risk means, suppose if you are risking 10 points for a target of 10 points. So that means you are at least a break even. 1:2 means, let us say you are risking 10 points for a target of 20 points. So that is 1:2 risk reward. Your stop loss is 10 points and target is 20 points. So this way, over a period of n number of trades, you can be a consistent trader. Based on these factors, you can choose the particular type of a stop loss for a particular type of a trade. The first type of stop loss is the percentage based stop loss. In that again, you can go for percentage of points, that is nothing but the points, or the percentage of the capital, or the percentage of the position size. The percentage of points or points based stop loss I already covered in my previous explanations. And just to touch upon, if the premium or the points that are bought or sold is 100, you can go for 1:1 or 1:2 kind of stop losses. For example, if you choose 20 points as your SL and you need to choose 40 points as the target. If you choose 25 points as the SL, you need to choose 50 points as the target. So that is nothing but the points based stop loss. Next one is the percentage of capital, which I explained. You can go for 0.5% of your overall capital, or 0.25% of your overall capital, or 0.1% as your overall capital for a particular, but always ensure that it is less than 1% on a single trade. Next one is the percentage of the position size. For example, out of your overall capital, if your position size is for 10 lakhs, you can go for 5% of 10 lakhs, which of course is less than the 1% of your overall capital. Next one is the percentage of position size. For example, if your position size is 10 lakh out of your overall capital, then you can go for 0.5% of your position size, which is 5,000. If you choose 1% of the overall position size, which comes out to be 10,000, which of course should be less than your 1% of the overall capital. You can use this kind of a stop loss for futures, stocks, or option selling. For option buying, it is better to use the point based stop loss. That is because when you buy an option, there is a theta decay. It will lose its value as the time progresses. I use the points based stop loss for option selling and futures trading. The next type of stop loss is the price action based stop loss. In that you can have a stop loss at swing high or swing low, or any of the support or resistance levels, and any key levels such as CPR and pivot points. Let me explain these with the help of the chart. I have taken Nifty 50 in a 5 minutes time frame. You can choose the time frame that you are comfortable, or the time frame in which you are trading. So what are the swing high and swing lows in this chart now? You see here swing low, and swing high, swing low, and swing high. So these are the swing high and swing lows. So how do we use this stop loss? Let us say you want to go long here. You can use the previous swing low as the stop loss. And here is another example. If you want to go short here, you can use the previous swing high as the stop loss. But ensure that you meet the 1:1 or 1:2 risk reward ratio before you take a trade. Next one is the support and resistance based stop loss. If you see here in the Nifty 5 minutes chart, here is the strong resistance. It is the double top, and if you want to take a trade at this resistance level, what you have to do is put the SL few points above this resistance level and then go short. So that is how you can use resistance as a stop loss. Of course, you have to ensure the proper risk reward is met before taking a trade. For the support, if you see here at this point and this point, there is a clear support level. It is like a double bottom kind of a pattern that has formed. And if you want to take a long trade at this point, what you have to do is put the SL few points below this support level and then go long. So that is how you can use the support and resistances as the stop loss for any kind of trading. It could be intraday or even positional trades. Next one is the key level or the CPR and pivot point based stop loss. Here I have enabled the CPR and pivot points and previous day high, previous day low. You can see here this is a CPR R1, R2, R3, S1, S2, S3, and previous day high, previous day low. Friends, there is a separate video to explain what are the CPR and pivot points, how you can use them for all kinds of trading, right from intraday to swing trading. You can have a look at those videos. And there is also a separate video to explain about the best intraday indicators using the CPR and pivot points. You can also take a look at that. Let me switch back to the 5 minutes time frame to explain the SL with respect to pivot points. You can see on this day, Nifty opened gap up and the first 5 minutes candle was a doji, which is indecisive candle, followed by a red candle with a wick. So that means there is an indication that Nifty is going down. And the third candle in fact confirms that there is a short trade here. So once you identify this rejection at R2, this is R2, you can go short with a target of R1, or even you can continue to trail up to previous day high. So what should be the stop loss? Your stop loss should be take a trade here and few points above the R2 if you have taken the trade at third 5 minutes candle. Another example here, Nifty came down and then what happened is you can see here there is a doji and then it took a support of central pivot and then breakout at CPR and it continued to go up. So when there is a breakout at CPR, you can go long on this candle with the stop loss as the central pivot. This is the central pivot. And of course the target as PDH or the R1. So that is how you can use CPR and pivot point indicators as the stop loss even as a target. Friends, this is how you can use the price action based stop loss for any kinds of trading, right from intraday to positional or even swing trading. For positional and swing trading, you just have to use the higher time frame and switch your CPR and pivot points to the weekly and monthly. Use these price action based stop loss for stocks, futures and for option selling. Avoid the price action based stop loss for option buying because we know that as the time passes, the premium gets decayed. Even if the price does not move, your premium that you have paid will continue to decay. So that is why better to avoid the price action based stop loss for the option buying. Friends, I use the price action based stop loss for most of my trading, including from intraday to positional and swing trading. For intraday, especially I use CPR and pivot point based SLs quite heavily. The next type of stop loss is the indicator based stop loss. As you know, there are n number of indicators. The most popular ones are RSI, Super Trend, ROC, and we also have the ATR. Most of these indicators do give you a buy and sell signal. You can use them for entry and exit points. For example, RSI has the overbought and oversold reasons. You can use them. Super Trend do gives you a buy and sell signal. I will not be able to cover all the details here for these indicators. The video will be too long. Use these indicator based stop losses for futures, stocks as well as for option selling. Avoid these kind of stop losses for option buy. The next type of stop loss is the time based stop loss. This is applicable especially for the positional and swing trades. When you have taken a position and if the price is not moving anywhere and if your capital is stuck, it is not yielding you anything, better to get out of the position and look for other opportunities. The time again depends on the type of the trade. It can be 1 week, 2 week, 1 month. Based on the type of the trade, you can decide to exit the position and look for the other opportunities. You can use this kind of a stop loss for futures, stocks and option selling and avoid for the option buying. The next type of stop loss is the mental stop loss. What it means is there is no stop loss in the system. You have mentally kept some stop loss to exit. So what happens is when the position goes against you, it will impact your psychology. You may end up waiting for something to happen, hoping that it will recover, and you may end up losing more. So that is why this kind of a stop loss must be avoided both for intraday as well as for positional trades. This kind of a stop loss requires a lot of discipline to use. So better avoid this kind of a stop loss. Yes, there are some people who use this kind of a stop loss, but they are having a high capital and they are quite professional and disciplined traders. Do avoid such kind of mental stop loss for your trades. Friends, the next type of stop loss is the trailing stop loss. The trailing stop loss is nothing but you start the trade with the any of the stop losses that we have discussed, and when the position is in profit, what you will do is you will keep shifting the stop loss. Let us say, for example, you have bought an option or a stock expecting that it will go up and your stop loss is 20 rupees. Let us assume that the moment you bought this stock, position is in your favor and it did not hit the stop loss and it moved 20 points above. So the option or the stock has come to 80 rupees. Now you have two choices. What you can do is you can move this SL to 80 rupees. The SLS come here. And another choice you have is partially book the profit and the remaining quantity you can keep the SL at 80 rupees. So that way you are ensured that you are in a profit. Even if the stock or the instrument comes back and hits your new stop loss. So as long as the stock or the instrument keeps favoring you, you can keep shifting your stop loss up and up. So this is how you can trail the stop loss. This I have explained it for a long position. Similarly, you can do it for the short position. And this type of stop loss can be used for option selling, futures, stocks, and for futures and stocks, you can of course do the trailing based on the price action also. Say for example, you can keep shifting to the next support level or the swing low. For the option buying, you can of course use the points based trailing stop loss. Friends, I hope you got an idea of the different types of stop losses and how to use them. If so, do press the like button and also share with your friends. If you have a feedback or any comments, use the comment section. There are other useful videos for you to watch. Do subscribe to this channel. Thank you for your time. See you soon.